Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. We got one more day for the Halloween Spooktacular sale for the TA series. Link is in the pinned comment below. For the technical analysis series, use the code INIT to win it, all one word, and claim your discount. And I'm going to be out at the New Orleans Investment Conference next week, so make sure you get ready for a lot of company interviews. That's where I get a lot of the companies for the premium portfolio. And if you're going to be out there, swing by the booth and say hi to Gloria and I. I love meeting you guys in person. It is the highlight of my trip, and I also have a little gift for you. All right, without further ado, let's go to the charts. Starting out as always with the S&P 500. Okay, so this is getting pretty exciting here. We hit another new all-time high this week, and why wouldn't we? There was a Wednesday last week, wasn't there? It's up 0.7% for the week. New all-time high, $6,920. I think it's going lower initially next week, but as far as a very bullish uptrend, I mean, you got the 20-day moving average and the 50-day moving average to catch it. We do have a topping tail here, though, not a real strong one, but a little bit of a one on the weekly. So for the weekly, it's looking like initially next week it's probably going to move a little bit lower, but still being in a bullish uptrend. This almost looks like a little bull flag right here for the S&P 500. I think it's probably moving up. And the dollar, the DXY, is up 0.8% for the week, so it went up like we thought it would. Now, it's likely, I think, that it will go up even more, and the next resistance it's going to have is going to be around the 100 mark, maybe 100 and 100.5. And that's the downsloping 200-day moving average. So this is going to be kind of exciting to see if it breaks through this. I think it will. I think that the DXY is probably going to get stronger and put some pressure on commodities over the coming weeks. And but we'll see what happens once it reaches that 200-day moving average. Maybe it goes up there and then it forms a topping tail, just like we saw on the S&P, and shoots down. But that's the only resistance that I see up above it here, and it's pretty close to it. And the M2 money supply is going up. I think we're getting pretty close here to quantitative easing, or QE as the Fed calls it, because everyone knows what that is. Basically what it is they just turn on the money printers and go burr, and having that option is amazing if you're a politician because it gets you elected. So I think that this chart is going to do one of these here pretty soon. Probably, if I had to guess, I would say probably Q2 of next year. I think we're going to hit a radical inflation, and they're going to turn on the money printers, and that's when all our commodities are going to the moon. The U.S. 10-year Treasury is up 2% since this time last week. Closed the week at 4.08%. Hitting right here on this downsloping 50-day moving average. So we got the bounce that we were looking for last week. Now hit the 50-day moving averages going down. I think initially next week it's going to be moving down, and kind of the same thing here for the 30-year Treasury. It's up 1.4% compared to last week. Now this is interesting. So we got this trend line right here that's hit back here in October, September of 2024, and then again right here in April of 2025, Liberation Day, and then again right here in September of 2025, blew through it, and now that's acting as resistance. So kind of a 50-50 bar right there. Both entry and or open and close is right around the 50% mark. My money would probably be on down. I think that's going to act as, this trend line will act as more resistance than the 50-day moving average. So I think it's more likely that both of these yields go down, which means the value of the bond will go up. Okay. And where are we? The VIX is up 6.5% compared to last week. So we had a little bit of fear coming in a couple of weeks ago, and now we're starting to gain a little bit more fear. It looks like it's kind of putting in a little bit of a triangle pattern here. So we'll see if this starts to widen and get more and more volatility. And remember, we want to see the VIX do things like this, because that's when we make a pile of money. We do not want to see it look like a flat line, because then the only way we're making money is on covered calls. We are over 19,000 subscribers on YouTube now, so that is a huge thank you to you guys for always being here. It's the little things, you know. It's doing always giving a thumbs up on the content. It's leaving a comment, right? You know, sharing your ideas, and a lot of the stock picks I get for this show come from you guys, and a whole bunch of comments will come in about some company, and then I'll look it up and I'll be like, oh my God, they're right. I need to start covering this. So, and sharing the content with anyone that you think needs to hear it. So thank you for doing that. I appreciate it. All right, and gold is down 3.4% for the week. So finally had a down week here in gold. And what is interesting about this is, okay, so let me go to the monthly here. So we had a monthly close, right? Now take a look. Let me remove these drawings so you can see it a little bit better. What does this look like on the monthly bar here for gold? Wait for it, Jeopardy music. And all of you guys that have taken the TEA course knows exactly what I'm going to say. It looks like a topping tail, right? It looks like an upside down cross, which basically shows this is the opening price on October 1st. This is the closing price on October 31st. It looks like an upside down cross, which means it is a topping tail. That is a very bearish looking bar, saying that it's probably going lower next week, and probably going lower this month. Now, for the new guys to the show, so this is looking bearish. I think we have some time before we're going to move up again. And during the week, I thought it might be a month or more for a new all-time high. Now I think it's probably, after seeing that topping tail on the monthly bar there, I think it's probably going to be several months. Now this is really good news if you're new to the show and you found us because gold and silver, you know, have been at all-time highs, right? Okay, so if you've been looking to get into the sector here, you know, I think now we're at a pretty good time. And the way you can play this here, I drew out this 10, 20, 30, 40%. Okay, so all I did was I took a Fibonacci extension, a Fibonacci retracement from the last low down here around middle of August up to the all-time highs, and then it puts you right here at these different Fibonacci levels. Now, I think that, whoops, let me move that back. There we go. I think that it's pretty likely that we're going to get some price action around these levels. And if you're new to the sector and haven't, you know, taken a position yet, I think that you could take a position right now. And you could take, see these levels right here that I'm rounding here, but basically $4,000 gold, which is pretty much where we closed the week, right? And these are the percentage allocations that you could, you know, bet on this. So let's say you wanted to take a physical position or you wanted to get into some miners. You could use this chart, take a screenshot of this with these amounts right here, and you could enter in these positions, you know, let's say you're going to bet $100 on gold, bet $10 at this orange line, then bet $20 at the next line, $30 at the next one, and your final $40 right here, right? I think it's pretty likely that we're going to see all of these levels get hit. You know, with this last one here at, what is that, 35.80, I think that last one will get hit probably 50% of the time, something like that. You know, maybe not quite that often, maybe 40%, but I think it's, you know, it's maybe a little less than a coin flip, right? So you could establish a pretty good position here, even if the last line doesn't get hit. You could get 60 of $100 invested, and then a few months from now, if we find another setup or a double bottom, you could put in your last little nut, right? So I like this a lot. The levels here are 4,000, 3,875, 3,750, and then 3,580. Okay. Yeah, so very exciting here. I think we're going to have a nice little correction here in gold. There is also a bit of a, if I go here to like the hour chart, we can see it's kind of a bearish looking pattern. This is almost like a bear flag ironing out, you know, so I think it's highly likely that we're going to get more sell-off here in gold. I mean, there are some fundamental things that would just say that this is just going to, you know, none of these lines matter and it's just going to keep on moving up. And maybe that is the case, but I don't think so. My money's on the downside. So if you're new here, you're coming in at a very, very nice time. It's tough to buy when it's just like green candles every week. You know what I mean? Like, you know, your risk reward there is pretty terrible. But when you have a correction like this, especially in a gold bull market, I mean, you know, the dips are where you got to buy. Okay. All right. We have a tiny bit of backwardation here, like, you know, a tenth of 1% or something like that in gold. So it's basically no contango, no backwardation. And this is gold divided by the S&P 500. Basically showing, if we zoom out here, like when the chart goes up, that means people are selling the S&P 500 and buying gold. And when it goes down, that means they're selling gold and buying the S&P 500. And so lately they've been selling gold and buying the S&P 500. And we can see that. Now, we said last week that made a nice cup pattern here. If I get this out of the way just so you can see it, made a nice cup pattern here, right? Like came right in for this cup. Let me draw it. Right there, there's your cup, and we're like, okay, we need the handle to iron out, and then we'll see if we get a cup and handle pattern where it just rockets to the upside, and does not look like it is going to play out. And the reason is because in a cup and handle pattern, we don't want the handle to go down further than the 50% mark, right? And this second blue line right here is the 50% mark, and it hit all the way down here to the 61.8. Now it's on this rising 50-day moving average here, but as far as a cup and handle pattern, I think we can basically negate that, and almost looks like a kind of a bear flag pattern right here. So I think the S&P 500 is probably going to outperform gold next week. All right, and where are we? PHYS is down 2.3% for the week. So new guys to the sector. This is basically where you're going to want to start with your gold position. Buy the physical commodity first, right? And then move on to the more leveraged and risky gold miners and junior gold miners. And this is the way we do it here is the red line, yellow line, and green line. Okay, so red line here. Let's say you're going to bet $100, bet 15 here on the red line, then bet $35 here on the yellow line, and then bet $50, your final bet down here on the green line. And the levels I've got right here for entry points, 29.25, 27.50, and 25.50. And not super scientific. All I'm doing is I'm just looking at past price action. I'm looking at where the moving averages are. And I'm looking at, like, this would come in for a really nice double bottom if it came down right there, right? That might be a nice little starter entry point, okay? I don't like to chase green candles. I like to let the price come to me and get these things super cheap, because that's where you really make your money, is when you buy these things and you can get them at good prices. All right? The name of the game is patience. All right, GDX down 1% for the week. So the 50-day, this lighter blue, so the dark blue line down here is the 200-day moving average. Medium blue line here is the 50-day moving average, and this light blue line right up here is the 20-day moving average. So hanging around this 50-day moving average, I mean, if you're itching to buy here, I guess you could do a little starter 5 or 10% position, but I like a lot better. I like $65.50, $58.50, and $54. And GDXJ down 1.3% for the week. Same kind of thing. The charts look almost identical, and you can see that it's just hanging around this 50-day moving average right here. I don't think that's a coincidence, but I do think it'll fail. I do think it will go lower. If you want to play a little more alpha than some of these ETFs, then check out our premium service on Substack. You don't have to take my word for it. Here is some of the latest feedback from subscribers. Ricardo says, I like your network because I enjoy knowledge gained in watching the technical analysis videos. So thank you, Ricardo. Jamie says, I sold my U₃O₈ stock, that's one of our junior gold miners, to pay for this. It was a good buy 6 months ago. Awesome, Jamie. Thank you for your support. Love hearing that. And depending on where you bought, you should be up, you were probably up about 150% or more. Andrew says, I like your work. A lot of information is free, and I believe in supporting this kind of content. Thank you. I really appreciate that. If you want to find buy points, like this down here, green arrows are entry points, red arrows are trimming positions. If you want to find buy points like this and real-time trade alerts, head over to Substack. You get a whole nother video just like this with company-specific entries and exits. I send out an alert before I buy or sell any position, whether that's a buy for the long-term portfolio or a swing trade on a call option. You get alerted in real time. I thank you for your support. I'm honored and humbled that I get to do this for a living. There'll be a link down below where you can check out our Substack. Alrighty, and silver is down 0.9% for the week on the futures market. It went down as expected and kind of got a bullish weekly bar. Let me go to the weekly right here and you can see it. Okay, there we go. And let me hide the drawing here so you can see it for a sec. Okay, so basically the opposite of the topping tail that we saw on gold for the month, this weekly bar on silver is showing that it could move up next week, but before we get too excited, if we go here to the monthly, we got a topping tail. Almost a topping tail, I guess. I kind of look at a topping tail as like both of these open and closed bars need to be in the bottom like 25% of the total length of the bar, and this is probably a third of the way there. So maybe not exactly a topping tail, but that is a pretty bearish looking bar on silver for the monthly, but bullish for the weekly. But my money for next week is going to be down. I think it's going to go lower next week. And so where are our targets? So we can do the same thing using the Fibonacci retracement right here, and we can see these different lines. So the different levels we got: 47.50, 45.50, 43.50, and $40.60 or 65 cents. And so if you're new to the sector and you just found out about silver and you want some buy points, I would do the same thing here. I would do 10% on the first line, 20 on the second, 30 on the third, and then your final 40% bet down here just north of 40 bucks. This would be a really nice way to gain exposure. And the beauty of this method is as it gets cheaper, you buy more, right? So you can get in the black really quick when these things reverse, but I think we got a couple of months. I don't think we're going to see a new all-time high in silver or gold until at least 2026. So this really allows you to establish your position. And if you're new, and I can tell by the comments, and you've been coming from like the tech sector that has kind of been getting smoked recently, you can rotate a lot of those profits that you had. I know you guys have made like 500–600%. You can rotate some of that into a sector here that is very likely to do what the tech sector has done over the last few years. Okay, so just my opinion, not financial advice, but that's what I would do if I was rotating in. Now we also have a little bit of backwardation here in silver. So it's not a huge amount. It's only about, what is that, 54 cents, something like that. So not a huge amount. But it is something, you know, it's north of 1%. Here is what it looks like, the futures price minus the spot price. Oh yeah, 54.5 cents. I was a little off. So not the huge amount that we got a couple of weeks ago, but there still is a bit of backwardation, but nothing that I see that would, you know, initiate any kind of trade or anything. All right, gold divided by silver. So the gold to silver ratio, last week it was 85:1. This week it is 83:1. All right, and remember the gold bull market the precious metals bull market is not going to be anywhere close to being done until we get a ratio of around 40:1. Okay, and PSLV, this is just like PHYS except for silver. So this is physical silver on the stock market. I should probably up this red line a little bit. We'll say the first line is going to be on this rising 50-day moving average around 15 bucks. I've got it down here at 14.25. I like 15 bucks now that I'm looking at this a lot more. And then after that, 14.25, $13.40, and then $12.75 for a stink bid. This one's up 0.6% for the week. But look at the low volumes here. We were having massive volumes here when that arbitrage was going on in London between the COMEX and the LME. And now we've actually started getting, you know, back to normal volumes again. So pretty exciting there. And SIL, this is the Silver Miners ETF. So after you establish your physical position, then you can move into the miners. Same kind of thing. You'll see a lot of the same patterns here this week with the gold miners and the silver miners hanging around that 50-day moving average, right? This one's probably going lower next week. SILJ, I mentioned on Charlotte's show last week that you know, you could take an entry point right here on this 50-day moving average. So I moved some of these red and yellow lines up. I like a limit order on this one, SILJ at 21.25, 18.75, and 16.25. And, you know, but I think we got some more weakness here. I think you could get it cheaper, you know, but if you're new to the sector, then I like these levels a lot. You know, and remember, buy more on the way down. Have an idea of how much you want to allocate. Let's say you're like, okay, I want 1% of my portfolio to be in SILJ, right? Then you do a 15% position here, 35% position here, and then a 50% position here of that 1% allocation. All right? Okay, ST says if somebody can't buy pullbacks in silver, gold, and miners, they will never be able to buy. I agree, sir. That's why I like our limit order lines here so much. And I think that's the way you can make the most money in the shortest amount of time. All right, copper, paging Dr. Copper is down 0.7% for the week. So I think basically anything south of $5 on copper is becoming a good deal. $5 a pound on copper. So this is the spot price of copper. It's at $5.09 is what it closed at this week. I think anywhere kind of on this upward channel green line right here, kind of around the 50, 200-day moving average is a good deal, which would be around $4.75. And COPX is up 1.5% for the week. So I sold out of this one simply, you know, longtime listeners will know that I have to close several accounts and move them over. And so it is kind of an exciting time that I have to close basically half my portfolio, turn it to cash, and then transfer it to another account. So a lot of fun for premium subscribers to follow that. This is one of the ones that I had to close, and it was a big position for me. This was 3% of my account. But, you know, made some massive moves in this thing, and nothing real scientific, just buying when the RSI and nobody cared about copper and selling when everyone loved it. But there is a little setup right here that I think could be forming. So I wrote 58.35 to 58.36, and you can see that it's got this perfect little double bottom within a penny of each other, right? So I could see a scenario where this comes back down for a triple bottom before it moves back up, right? And this is the price point right here where I would be looking to possibly make another entry if you weren't me and had to liquidate your accounts, right? See this gap right here? Usually gaps fill, but not always. But look at what you got right here. You got a falling COPX price, and you have a rising 50-day moving average. I think this could create a real sweet spot, and it might actually happen next week. That price point would be right here, 58.35, 58.36. Maybe add a nickel to that, just to be safe. All right, and COPJ up 2.5% for the week. So I also sold out of this one. I had 1.5% of the portfolio in this one. Had some really nice gains on this. I mean, just since Liberation Day here, over 100%, 120% right here. But I think copper's got a long way to go. I don't think this story's over at all. I think it's just beginning. Yeah, this is kind of a bear flag-ish. Like if we look here, you can see this kind of coming down and then kind of, you know, bear flag-ish. That is a word. It comes up as a red squiggly line when I put it on my Word document, but that just shows you how limited Microsoft's vocabulary is. So what I did with my copper profits is I rotated it into a copper royalty play that I think has a lot more upside. All right, and uranium is up 6.3% for the week. So it went up as expected, and I would like to think that it went up because I drew this white line last week. That's probably not what actually happened though. Let's see what pattern do we see here. So see how we have a little bump, spike, bump, spike. What's happening this week? I'm going to guess that we're probably going to follow a similar pattern here. And I think it will probably do something like this. Okay, I think that would make sense. Okay, so I think we're probably going flat to down next week in the spot price of uranium. The term price, so going out 12 months or more, it's like 81. And here we're sitting at 82.25. So yeah, I think the price is going flat to down next week. We'll see. All right, and SRUUF is up 8.1% for the week. Sprott Physical Uranium Trust. So this is 55-gallon drums of U₃O₈ sitting in a warehouse, unavailable to the utilities, and they bought over 500,000 pounds last week. 550,000 pounds purchased last week. They're up to 73.5 million pounds. I was eyeing this 200-day moving average as an entry. I was really hoping we were going to correct back down to it. That's not going to happen now. That is now a pipe dream. But do not sell yet. No, I think that all these entries that we made, I know a lot of you guys got back in here, south of $13. Good on you. I wouldn't sell any of that yet. I think we still have another nice little run here in SRUUF, assuming we don't have some radical liquidity crisis. This is looking like a baby bull flag. What we'd ideally like to see next week is if we have a little sideways consolidation or down in the spot price, this is very likely going to do this, and then that will be setting up for the next run. We can maybe get a little bit of a correction here in the RSI and a little bit of correction in the MACD, and this is where we can strike again. We'll see if it happens next week. And URNM is up 9.5% for the week. Had a really nice bounce right here off of the 50-day moving average. So looking fantastic. Came right down there for a perfect little double bottom and then shot up. Happened on Monday. That would have been a nice little entry point. And if you have no uranium exposure, I think that's a decent place to do it. So for the new guys that want to get in uranium, I like this level on URNM, 56, then 50, and then 44. And URNJ is up 8.2% for the week. So same kind of thing. Look, if I just go from one to the other, it's kind of tough to tell the difference between the two charts, right? This one's just a little bit more alpha play. So nice little double bottom right there and then shot up. These are both kind of bull flag-ish. I like the pattern better on SRUUF. But yeah, $27, $24, and then $19.50 for your stink bid. And see, these can have some massive runs. So we got into this thing back in March of 2023, had a massive run up to 125%. The mistake I made was I didn't sell up here. I just held on, right? And had to wait a whole nother. It went from, in a year, it went up 125%, right? And then it took a whole year to hit the bottom again. And then now we're back up in no time. This time I took profits. I learned from my mistake last time. But look, from Liberation Day, from bottom to top, up 203%. Okay, so these can have really nice moves. I think we got a little more room to go. But I'm a little more interested in, instead of playing this ETF anymore, I sold out of this one. And I'm keeping some of the alpha plays, individual companies that I think will perform even better than what we see on these charts. All right, and oil, WTI, is down 0.9% for the week. You'll notice I have some price points right here that are very similar to what we saw on COPX. All that's doing is taking these two bars, going back to Liberation Day sell-off, April 9th, and then right here on May 5th, and those are the two price points, $55.12, $55.30. I think we could, that's going to be kind of the baseline support. If you don't want to remember that, just remember $55 on WTI, and that will get you close enough. And kind of a bull flag pattern here. Okay, so we can see got a little bit of a run up here, a little bit of a flag pattern. If we actually ran that and we did a target on this, okay, we'll do that, and then we'll extend it up. It could get as high as 68. I could see that as doable. But our base case for oil is that in the near term, it's probably going to get lower. Brent, so this one is down 0.5% for the week. This one looks a little similar. It looks a little bit more like a pennant than a flag to me. So see, when you get the pennant, it kind of looks a little bit more like a triangle. They're basically the same thing. They forecast the same stuff. You can do the same targets just like we did. For the other one, this is showing an upside target of around 71.50. And XLE is up 0.1% for the week. See, look, you can see the same kind of bull flag pattern right here. So maybe oil is going to be going up. But if it does correct down, the levels I like right here for XLE is 87.25, 84.50, 81.50, and then a stink bid down at 79.25. Oh, last week I talked about covered calls. My buddy might be doing a covered calls course, and got a lot of positive feedback on that. Mark says, I'd love a course on covered calls. I've got a heck of a lot of Canadian bank stocks that have been wonderful for me, but if I could eke out even more income from them outside of their dividends, I would love that. Okay, so I sent your guys' feedback to my buddy. He's excited about doing it. He's putting it together in PowerPoint and everything. I will let you guys know when that's available, and I'll be taking the course too. I like doing covered calls as well. But you know, I'm kind of a neophyte at it compared to him. You know, for him putting together a weekend course on this, I think this is going to be well worth our money. All right, and natural gas shot up 24.8%. So last week I thought we might get an island reversal here. Like this is basically the information that we had was to this bar right here. That turned out to be exactly wrong. Whatever is the exact opposite of an island reversal, this is it. Okay, so this just absolutely shot up. Nothing to the downside and everything to the upside. So we're north of $4 per million BTUs on Henry Hub, and kind of looks like whatever the exact opposite. Looks like a bull flag formed and then target achieved. Maybe that's what I wrote before I pressed record. That doesn't look like a very good bull flag to me. Well, whatever. Anyways, it shot up. I don't see any tradable patterns here other than probably tapping on some resistance right here. See how we got price action back here in June that hit the same price point, then back here, and got a lot of price action back here in 2021. Fair bit of resistance. Usually when you get things that shoot up like this, there's usually a pretty quick reversal. I don't really see anything right here in the MACD or the RSI that's telling me on Monday that it's going to reverse. I would expect Monday or Tuesday it's probably going to be higher, but then after that we'll probably get a correction. All right, so if you want to play this in the ETFs, FCG is the way, in my opinion, to do it. Down 0.8% for the week. So kind of dancing in between our red and yellow lines right here. So I think kind of anywhere now is fine for an entry level position. Looks like it's probably initially going to go up next week for the beginning of next week. Speaking of next week, going to be at the New Orleans Investment Conference. I mentioned that at the start of the interview. What I didn't mention is that we're going to be doing a raffle for a 5-ounce bar of silver and a 1-year premium membership. So I'd love to see you out there. Stop by the booth and say hi and enter the raffle. All right, and thermal coal is up 2.1% for the week. So ceiling, as I see it, is still around 120. Floor is still around 100. So just trading within that range. And it's just this white line that we drew here was basically put in there by our coal expert, Matt Warder. And so far, it seems to be kind of following that. We interviewed him around here. He thought we're going to be going into shoulder season around October, November. That's what's happened. And now we're starting to move up. So far, Matt has been correct. We need to get him back on the show. I think he might be out at the New Orleans Investment Conference. So maybe we can snag an interview with him while we're out there. Met coal up 3.4% for the week. Last week I said the ceiling was around 195. That doesn't look to be correct because on Friday it shot up to 200 on the dot. So up to 200 now. We might have another ceiling that I see after 200. You got some resistance around 205 and then basically 220 up above that. Looks like it's going up next week. And coal, our favorite coal ETF, because it's the only one that exists, looks like, so again, theme of the week, around the 50-day moving average. So I like that if you want a position in coal. $22, then 20, and then 1875 for a stink bid. And what kind of pattern do we see here? It kind of looks like it's going up to me next week. Yeah, I think so. We got a little spike, bimp. Yeah, probably another couple little bips, and then on the way up for coal next week. All right, and platinum is down 1.6% for the week. So the negative divergence played out, basically saying, like, if you look at the RSI right here, how the RSI is getting lower, but the price was moving higher at the same time. That's forecasting that the price is going to break down, and that's exactly what happened. This is kind of looking like a bearish pattern to me here. And you guys can probably already see this. I don't need to draw these anymore, but you know, a little bit of a bear flag. So I think we could have some more downside for platinum here. Palladium, this chart looks much better, and we were talking last week about a possible cup and handle pattern right here, and so far it seems to be working out. So remember, we don't want this handle part right here to go past the 50% retracement mark, and it would dip down a little bit below it, but we don't want it to close down here, on the daily, or certainly don't want to close down here on the weekly, and it hasn't. So it looks like it hit a nice little bullish bar right there on, when is that, Wednesday? No, Tuesday, and then shot up. So we might be getting a cup and handle pattern here. If that is the case, then the way we measure these is we take the bottom of the cup and measure it to the top right side. Okay, I'm going to shrink this down a little bit so we can move the chart. And then we basically just do, this would be the breakout line right up here. And we could get a projection of up around 2,300 for Palladium. So this is pretty exciting. Yeah, I don't know. This premium subscribers, stay tuned. We might be taking a position on Palladium last week. These two yellow arrows I'm keeping here, I suppose, just to punish myself, because this is the moment where I sold out of Palladium and went all into platinum. Basically took that money and went into platinum because I thought platinum would do better, and that has been exactly wrong. And so as a trader, I'm not afraid to trade, and if it looks like the charts are going to be good on Palladium, I will be taking a position in that. All right, easiest way to bet on platinum is PPLT, so that you're buying into physical platinum bars in a warehouse. And don't really see any tradable patterns right here. We've got a rising 50-day moving average, so if you want an entry into this, I think that might be a decent place to do it. There's this gap right here, which is where I drew this red line, and it's also on this long-term trend line going all the way back to 2016. I think that's a decent place to establish an entry. Would be right there, and then after that 125.50 and then 17.50. Okay, and platinum divided by gold. Where are we here? Platinum divided by gold. Basically, okay, let me just zoom out so you guys can see the ratio chart here. I wrote so cheap. If you want to pause the video, this is my thesis for when I'm going to be selling my platinum, and I'm playing it by this ratio chart. Okay, so if platinum gets to parity with gold, meaning that you could basically trade 1 ounce of platinum for 1 ounce of gold, then I will do that with half my position. And then if it gets to 1.5, then I'll do that with 30%. And then if it gets to 2x, then I'll trade the remaining 20% of my position for gold. So remember, gold's money, platinum is an industrial metal, but these ratio charts are kind of interesting. Here's the one on silver. This is literally where I traded silver for platinum. We'll see if that is intelligent or not with time, but there are moments here where it takes 150 ounces of silver to get you 1 ounce of platinum. And when we made the trade down here, it was a kilo. It was basically 30 ounces or 31 ounces of silver got me 1 ounce of platinum. So it's kind of a neat trade. We'll see if it works out. All right, and the Bloomberg is down 0.1% for the week. So let me zoom out here. So last week I said I thought that the Bloomberg was going to move above this resistance trend line right here, which I've got drawn at 107.50. And we can see this goes back to July of 2023. So we got a couple of years on this thing, just bounce, 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 bunch of hits, and it got rejected and went back down. I think this week it's going to break through. We'll see. I mean, you got a pretty bullish uptrend right here, right? Look at how much, okay, so watch the RSI right here and look at the MACD. Okay, see how low the RSI was right here? It got down to 31, right? And we moved all the way up here, but look, the RSI still is at 57. It doesn't get overbought until it's above 70, right? So the fact that you've had all this price action moving up, but the RSI isn't that high, I think there's a lot of pressure behind this thing to move it through next week. We'll see if we finally break this resistance line. I am not the only trader that has this white line drawn on his chart. I think just about everyone that is looking at the Bloomberg has that same exact white line, and I think next week it's going to move through it. So we'll see. All right, nickel is still nickel futures down 1% for the week, still sticking around that 15K line. NIKL is the nickel miners ETF. Thank you, Sprott. I like an entry right now. Okay, so got the red line drawn right here at 14.25. 25. And yeah, I like an entry right there for a starter position if you don't have any. So you got this little gap right here, right there on the rising 50-day moving average. And then after that, 1275 and then 1150 right down there on the 200-day moving average. And we talked about this one next week. Oh, I need to make this one as red because I own it. Yellow means it's on the watch list. Red means I own it. Okay, so we did our entry position with premium subscribers on Tuesday of last week. And again, nothing real scientific. Okay, so this is the rare earth ETF, right? Nothing real scientific. It was just a double bottom. Okay, so all it was down here, click, twice, entry point. Okay, so it looks like it might be coming down right here for a possible another third chance. That'd be on a rising 50-day moving average. So at 67.50, and then after that 62.50, and then a stink bid down at 55 bucks. This one is going to be extremely volatile because all it would take would be one project coming online, and that could really disrupt the global market with rare earth. It's such a small market. Like, you think gold and silver market's small? That's nothing compared to rare earths. So if we pick the right company, I think this could absolutely be amazing, and especially if we get some government subsidies. The PIC ETF is, what is it? Up 1.3% for the week. So this is kind of our white resistance line we've got drying up here around $46, $47. Rising 50-day moving average. I like limit orders on this one at 44 bucks, 41.50, and $38. And the Bitcoin is, as of this moment, down 3.7% compared to this time last week, riding this 200-day moving average here. So watch this dark blue line, 200-day moving average. My money for next week would be that Bitcoin would be up. Let me go look at the hourly here. Yeah, it is kind of bearish looking. Game time decision? Actually, I'm going to say I think Bitcoin will be down next week. It is sticking around this 200-day moving average. It is above it as of this moment, but man, when I look at the hour, it looks like it's petering out and probably going to roll over. So I would guess that Bitcoin will be down next week. Alrighty. Well, thank you guys. I love doing this. If you want to play a little more alpha, check out our premium service. You get a whole nother video just like this with company-specific charts, real-time updates of what I'm personally buying and selling. Remember, when you sign up, as long as you never cancel, you are grandfathered in at that price. Thank you for being here. Go to stevebartonmoney.com for more, and have a wonderful day.